Hello traders, it's Samurai Trader here. I'm putting together this short video for the many questions that I have from potential clients and students and other traders that find me on YouTube asking questions about the different types of charts that they'll see me trade at different times. They may see me trade using volume charts, tick charts, range, etc. Why do I use candlesticks? So I thought, well, I'll just put together a quick video for you to see and perhaps for me to cover some of these answers for you. If you haven't already subscribed, please subscribe to my YouTube channel where you'll be able to be kept up to date with these sorts of videos, educational videos, and probably more importantly that interests virtually everyone, you'll be able to be kept up to date with a lot of the live recorded trading that I do. And if you're not already a student and you'd like to know about my courses, well, if you're serious about your trading career, I'm serious about your success. Traders, I'm a full-time day trader, trader success coach, and consultant of the funds management industry. I do this because I'm passionate about it and I love it. For $197, you're purchasing the world's best, in my opinion, day trading strategies. There's 4 in there that are absolutely golden, and no day trader or swing trader should be trading without them. So please drop me an email, watch some of my YouTube videos, and you'll get to see the great strike rate win-loss ratio that I have from trading, and you can do exactly the same thing. So moving along, enough of the advertisement. Let's have a look at this here. If you're not already full screen, bottom right hand corner, and you'll be able to expand this as well. So first of all, of course, we've got bar charts, and I still deal with some of the old school traders, excuse me guys, you know who you are, that still swear by bar charts. And a bar chart, and exactly the same as a candlestick chart, they give you a lot of information: what your closing price is, your opening price, etc. And people like Al Brooks, who is a very big price action trader, he won't even consider anything else, and mind you, he's great, fantastic books, etc. he puts out, but I prefer candlesticks. I believe the candlesticks are a lot more visual, and after a period of time you get to, in a blink of an eye, once again you've got a good idea of what the market is doing. It gives you exactly the same information. I just think they're more, or much better, visually. So by the way, if I'm going too quickly, please feel free to stop this video if you want to have a look or read any more of this information. I just don't want to make this video too long for you. So there are many ways to read the market, and I mainly use Japanese candles, as I mentioned. We can use time-based charts, number of transactions. You'll see me use volume, ticks, volume, and range. I rarely use time. When I'm trading, I'll always have a anchor chart open about 3 times higher. Some say that their anchor chart must be time. I don't personally see the difference. Okay, so once again, I love tick, volume, and price. So with time-based charts, if you're a day trader, it's perhaps very relevant. Of course, if you're trading Forex, you may be trading 4-hourly, 12, and daily, and you'll usually use time-based charts and candles. It gives you a lot of information. The disadvantage, of course, it can be what I call very choppy, and when you're trading 4 hours, a lot can happen with 4 hours in a 4-hour period, or even in 5 minutes. That's why I like some of the other time frames that we're going to have a look at. Now, a tick chart, which is probably my favorite, counts down the number of predetermined transactions before forming a new candle. And you can see just over here we've got a nice little double top. You can do these with time-based charts, but I think tick charts just make them a lot smoother as far as reading the market. Now, of course, they can be very volatile as well. They can move very quickly. Now, the type of trading that I do, if the market's moving too quickly, I'll usually sit it out anyway, because that's where we're going to have slippage It's a lot harder for my style of trading, what I believe. I'm just not quick enough on some of those. Then you've got volume charts. Like you'll see me trade the NQ on volume. You'll see me trade the Euro Stock X50, the FESX on volume as well. And I just think it gives a very, and we're going to have a look at some live examples of that in a moment. I just think they're a much better chart. Then you've got range. Range forms a new candle every time a predetermined number of points or pips have been exceeded. Now let me just explain something here. Points or pips. Now pips, of course, we're relating to Forex. Now we have three different things here. We've got ticks, points, or pips. Now if you take the ES, which is $50 a point, it moves in 0.25 increments, which is a tick, which is $12.50. So to a full ES point, there are 4 ticks. So where I talk about, or where a trader talks about the market's ticked up, it's moved in an increment. Now if we go and take the NQ, it's $20 a point, and there's 4 ticks to a point on the NQ. The Dow, the YM, only has a point. It moves in $5 points. There are no increments in between, so it's just called a point. So hopefully I haven't confused you, but I've just had that come through a number of times. And where do pips come into it? Pips is the minimum movement that you have on Forex. So hopefully I explained that okay. Just something I wanted to throw in there. Now the advantages, range charts remove the noise in markets and highlights congestion in the market, which is where we want to be very cautious. When we see on a range chart 3 or 4 candles horizontally or side by side in a narrow range, you want to be very, very cautious there. We're looking for our breakout. Now we can see even you've got 4 candles here, but you've got a lot of information because there are other indicators that we would be using here. And we've got a nice little double top, etc., which I don't want to go into right now. Now there is something I do want to quickly talk about also, is Renko charts. I've done a huge amount of work on Renko charts, and some very extensive research reports using Renko and automated strategies, particularly trading double tops, double bottoms, and ranges using Renko. Now Renko really smooths the look, but you also can lose a lot of information on a Renko chart, and that's literally what a Renko chart can look like. And you can trade all different types of time frames once again using Renko. Now what I did want to show you here was a 5 pip Renko here on the Euro Yen against a 5-minute time-based chart of the same time period. And you can see here in time, okay, for an example, look at our trend lines there and over here. So you can see here, and you can see the 5 minutes there, and look how smooth it is with the Renko. So it really gives you a very clean chart. However, you lose a lot of information as well. There are some good benefits in trading Renko. However, I don't trade them for day trading. Something that we're doing with managed accounts, we're going to be using Renkos in our automated strategies, but I don't use Renko charts for my day trading. Now what I do want to do now is just go across to a chart, and let's have a look at this. Now a couple of things I want to go through, which comes up constantly. Now let me just now I know for new traders you'll be looking at this chart and there's a lot of things on there. Well, it looks like it, but once you understand the relationship to each one of them, you'll understand why we have them on there. Now the thing here, this is a 55, sorry, this is a oh gee whiz, I've got the wrong market here. Let me just stuck over here. This is what I wanted to show you. That was, by the way, that was the euro dollar, the 89 tick chart on there. But what I did want to show you, let's get the right chart here, is the NQ 55 tick. Now I trade during market hours. I trade the 133 tick. Now if I go across, now this is in TradeStation, my charting package, you can see here, and this is virtually every trading package, is numerous options that you have: line breaks, point and figure, range, Renko, tick, volume, and you can adjust all of these. Now what you can see here, I've got it set to a 55 tick, 5,000 candles back, and during the day this is what I trade. I use the tick chart where the volume is much lower. Now where I am recording this today in Australia, it's 1:42 p.m. on a Friday afternoon, and so far for the turnover, I'm just going to tell you, we've turned over here 13,000 contracts since the market has reopened. So where traditionally you can turn over 120 to 250,000 contracts during the main New York hours. So we've been open now for, what's that, about 5 hours now. The market's 4-5 hours now, and we've only turned over 13,000 contracts. So we have much lower volume. So if I was to apply and change this, so we can see here, this is going back, this whole chart goes from the market reopening here at 8 a.m. my time right up until right now, which is 1:43. You can see if I was live trading right now, there's been some great trading opportunities and there's quite a few candles. Now if I was to drop that time frame down to here, to increase it, I should say, to 133 tick, we'll be able to squeeze it all on a window. There's the whole day's action, as you can see there. So I'll drop it down depending on the time. Now for 133 tick can move very quickly as well during market hours. So you might want to increase that to a 233 or a 550, like I'll quite often use on the Euro Stock X50. Now the Euro Stock X50, the FESX, is the symbol in TradeStation. You get a very similar amount of contracts trade on that market compared to, say, the ES. So you get some great volume. You couldn't, well, it's, when I say couldn't, just makes it a lot harder trading a 133 to a 233. I think the 550 tick or share bar or volume is much better on that particular market. Now let me now change this to time. So let's have a look. We'll change it to by the minute, and let's make it a 3 minute. And here of course you can put in how much time you want to go back. Let's just go back 2 weeks, and it comes up. Okay, so we can see here that on time we can see where the market opened very quickly on the 3 minute candles, and since then, see, we've got a fairly narrow trading range. Now to me that's nowhere near as attractive to trade as in comparison to a tick chart. Now another option I have is trading volume. Now because we've got very low volume, we've only, as I mentioned, turned over about 13,000 contracts. Now just on that point, one thing that I find really interesting, the YM, the Dow, turns over during New York hours probably, generally I would say, just off the top of my head, probably 30%, 40% lower number of contracts compared to the NQ. But during the after hours market, there's a lot of traders come home and trade the Dow. They're almost identical. So far today we've turned over on the Dow 12,822 compared to just over 13,000. I find that interesting. Now let's just go and have a look at a volume. Now here, let me just put on 100 volume. That's for contracts. So for every 100 contracts it trades, we get a new candle form. And you can see here that we've gone up. We're in a fairly tight range. We've gone up. We had the pivot bounce off here. We formed a double top. We've gone up and tested it. We've had a pivot bounce down here, etc. So you have lots of options. Now, one of the emails that I had today was about range and about ticks, I should say. So you can see there, that's where you adjust your tick, just in that little box there. Now, if you only had one tick, that is for every contract. All right, let's just have a look. Let's just put 10 in here and see what happens here for a moment. You'll have a lot more candles come in, and you can see the amount of candles, and it makes it very, very hard to trade. Okay, it is tradable, but if we go back there, you can see how many candles we have formed. Now, remembering we have got a lot of our great setups here, but you've also got another problem, and that's the amount of volume, so to get your fills, of course. So getting back to this, what else did I want to cover? Okay, so during the after hours market, if you're trading the YM, which is the Dow, or the NQ, on both of those I recommend a 55 tick chart during the live market hours, or of course it's all live, but during the New York hours. On the YM, I'll still keep it, I'll increase it to about an 89 tick. Now, one thing I do want to show you is this, the ES. Now, so far the ES, the E-minis, which of course has the largest turnover of US futures contracts, so far today we've turned over 101,000 contracts. Now, this is the 144 tick. Now, I like to trade either volume or 550 when New York was open, but here I like, you can see here where the market's opened, I really like the 144 tick. Now, you can see there we had a beautiful T2, we had another T2, your entry was there, and you can see you get some really good movement. So if you were trading today, or say you got home from work in New York or LA, or over in Europe, well, of course it's very very early there, but you've still got some great, and you'll find this great movement, and you'll see this virtually every day. Get some great movement on the 144. Of course, I'm seeing a higher volume at the moment because of what's happening in Greece at the moment, but look at all these here. Now remember, we're waiting for price action under our 34, so we've got trade opportunity here. We had another trade opportunity there. We've got a nice little T10 there, etc. We've got a nice pivot bounce, etc. So my preference getting back is tick and volume charts. Time, I don't like to day trade on time charts. I think we miss out on too many good trading opportunities. So traders, hopefully this short video gives you some, or fills in some of the gaps that you may be missing. Thank you.